SoFi Technologies. All right, so SoFi stock down 10 percentage points plus here today. Stock got absolutely leveled with their earnings coming out before the bell. Now, I saw this on X, and I thought, oh, this is a good little screenshot to kind of, get us started here with our SoFi discussion. SoFi Q1 earnings, breaking news. Q1 revenue, $645 million, which beat expectations were $550 to $560. That's insane. Q1 net income, plus $85 million beat. Expectations were 10 to 20. Q1 EBITDA beat. Q1 members added 622,000. 2024 net income raised to 165 to 175. Previous net income guidance was 95 to 105 here, okay? Now, there's some monumental things going on with SoFi that's very important to understand. And I'll let you know if I was out there buying the stock here today, which might have been, okay? So, members, look at this. Up 44% year over year in terms of, I just call them customers, but SoFi calls them members. 8.1 million plus now at this point in time. Incredible growth. They're taking market share from the competitors, which are more like the traditional banks overall. This is phenomenal for SoFi, right? Now, if we look at Galileo accounts, they grew 20% year over year. And I thought this was something that was totally missed by the masses. And I'm like, I think this is important, guys. Okay, this is the largest growth rate. They grew 20%. It's the largest growth rate since 2022 for Galileo, right? They had 15% growth, 11%, 10%, 11%, 20%. So one is the trend is now growth. They went from 10% to 11% to 20%. That's phenomenal. But just having the best growth in Galileo since 2022, I don't think that's something that should just be glossed over there. That matters. And like I said, this matters significantly. More customers mean more of a long-term TAM opportunity, right? Total addressable market. Now, lending products grew 20% year over year. I think this could have grown faster if maybe Noto wasn't a little more conservative, which I don't mind at all, by the way. But 20% growth is still very nice growth for the company. Now, if you want some negative stuff, you're not going to be able to find much negative stuff in this report. I found one negative thing, okay? On a sequential basis, adjusted net revenue went down for the company. And on a sequential basis, meaning month or quarter over quarter, quarterly adjusted EBITDA went down for the company, right? And that is not something we witnessed back in Q4 to Q1, because that's one of those things I want to look back and I was like, well, did we see a similar phenomenon Q4 to Q1 last year, right? And we did not. There was growth Q4 to Q1 in revenue and growth in Q4 to Q1 last year in regards to adjusted EBITDA. So that's one of the very few negative things you can find. But at the end of the day, quarterly adjusted net revenue up 26% year over year and 25% quarterly adjusted EBITDA up year over year. I mean, those are still great numbers. Now, if that keeps falling and falling and falling, then maybe we got a problem. But, the growth that is a year over year basis always matters the most. Now, when you check out this non-GAAP guidance, they guided for 14 to 16% revenue growth, right? And they guided to adjusted EBITDA margin of 21 to 22%. And I think it's smarter to be conservative in the rate environment we're in. I think Noto's making the right decision. Once again, I think he could easily push growth rates much more than this Anthony Noto could. But I think it's smarter, much more intelligent to go conservative. You got Fed funds rate. Here's the deal, okay? We've now had Fed funds rate at 5% plus for a year, okay? Which is extremely high from anything we're used to in the past 20 plus years, okay? So we got a Fed funds rate that's way higher than we've been used to for a year straight now, than we've been used to for the past 20 years. We're now going on a Fed funds rate of 4% plus. We're now going on about 18 months of 4% plus, right? And the longer the Fed keeps rates elevated, the higher and higher probability you're going to have problems in the economy, right? Things are going to break in the system. And so when I look at this overall, I think it's smarter to be conservative rather than go and give everybody a loan in the world, okay? I think that's just a good decision overall, a prudent decision to make sure SoFi is a lasting company for the long term. And that's what I really like about Anthony Noto. He's really guiding this company for the long term. He's not just like, oh, let's just put up an insane growth rate in the short term so our stock price can go to $20 or something like that. He's making sure this company is around through inflation, deflation, recessions, great economies, all those sorts of things, right? Fiscal 2024 guidance, I thought a few things were important here. The lending adjusted net revenue to be at 92 to 95% of 2023 levels, so that's obviously down year over year, right? And once again, that's Noto being careful. GAAP net income, so it's a generally accepted accounting principles, of 165 to 175 million. I love that. Adjusted EBITDA of 590 to 600 million dollars. I love that overall. So very happy about that. Also, in regards to the fiscal year 2024 guide here, they're talking about annual growth of 15 to 17% here. That looks good. And also talking about on a GAAP basis, 165 to 175 million. Now, check this out. They were at $301 million GAAP loss last year. If we look at the previous year, $320 million GAAP loss, 484. So this company just reached the infant stage of profitability. Imagine where their net income can be 5 years out, 7 years out, 10 years out from now. I mean, what a huge flip in a matter of just a few years, right? I mean, from nearly a $500 million net loss to now 165 to 175 million dollar net income in a matter of just a few years. That's impressive, man. Diluted EPS talking 8 cents to 9 cents there. So the bottom line is getting where we wanted to see it. Okay, at the end of the day, if I hold a bank, I don't want to just see growth rates in revenue and to customers. I also want to see profitability. You're a bank. You're supposed to make money. Okay, so I love it. Now, in regards to SoFi, analysts have this company growing. This is looking at 1000xstocks.com, right? Next year, EPS, 160% roughly, right? We'll see if that changes. SoFi trades at a forward P of, we can call it 75-ish, somewhere around there roughly, right? And this is looking at analysts' expectations, but a lot of it comes down to, what do you also expect? But we can say 75. So is that insanely high versus traditional banks? Sure, 100% it is. But traditional banks have trouble growing their customers at all. SoFi is out here adding customers at a ridiculous clip of like 40% plus, right? They got very strong revenue growth. They got incredibly strong EPS growth and continued strong EPS growth expected. So overall, when I look at SoFi, it looks pretty flippin' flapjack and good. Now, did I buy SoFi stock here today? Well, yes, I did. I did buy SoFi stock here today. About 1,900 shares, $7.06 I paid for those shares. And yeah, man, I really like the risk reward here. I think SoFi's set up so well to continue to attract a lot of the young millennials, right, that aren't maybe committed to a bank already. I think they're also so well positioned to capture Gen Z and Gen Alpha. And so as those young millennials and the Gen Z folks, the Gen Alpha folks, as they get better jobs over time, make more money, their net worth goes up. I mean, SoFi's deposits are going to go up massively over the coming years. Obviously, their revenue from different categories is going to go up massively over the coming years. And they ultimately, the way I look at SoFi, they built an ecosystem of products, right? And they're going to continue to build out that ecosystem. It's not like they're done. There's just like, they've already have a phenomenal ecosystem of products. They're going to be able to cross-sell these products to their customer base, right? Cross-promote. They already do all these ingenious things about like, if you have, if you set up your bank account to have direct deposit, you can get like a super high rate on a savings account. They already set these things up where if you sign up for one product and another product, you can get a lower interest rate. Like they do all these little genius things, in my opinion, that are really going to continue to push people into multiple products with SoFi rather than going to other financial institutions for those products overall. And so I think they're just going to continue to grow bigger and bigger and bigger because their ecosystem is going to get bigger and bigger and bigger, right? All they need to do is sell somebody one product, and then they got this other ecosystem of products they can sell, and I think it's genius, okay? Now, the other thing is weak banks are going to likely continue to go under with high rates like we have right now. So if anything, there's going to be less competition moving forward, right? And so that's just a little other food for thought in regards to that. So overall, I'm really happy with SoFi. I like everything that's going on there, and I'm looking to continue to add SoFi shares here and there. As I picked up, $13,000 worth of shares here today or so, I look to continue to pick up shares of SoFi, okay? All right, back to Anthony Noto, SoFi CEO.
Guidance was raised. You're feeling positive about the way in which you're steering the company. You say you're at an inflection point. But why the second quarter being below expectations? What can you add to what you're seeing right now?
We had a great first quarter, as we reported 26% year-over-year growth, and it's in line with the transformation that we talked about, which is our combined tech platform business and our financial services business would grow 50% or more. It grew 54% 4% year over year, and that combined with flat revenue for lending, and that was part of the plan. And we had
Rivian's going too fast around the neighborhood. Slow your Rivian down. Get a
our second
Cybertruck.
consecutive quarter of GAAP positive EPS, in addition to growing our book value on a tangible basis per share by about 16% sequentially. We also guided the full year, as you mentioned, above not just our beat, but also above our prior guidance. So that's a positive overall outlook. We had not given Q2 guidance before. We typically give the full year and then the current quarter that we're in. So at the end of 24, we gave guidance for the full year and Q1, not Q2. The analysts are using their own estimates for that. And because we're taking a conservative view on lending will be down sequentially in Q2, while our tech platform revenue and our financial services revenue will continue to have strong year-over-year growth, but also strong sequential growth and continued profitability as well. So we feel really great about the business and the transformation we've made over the last 6 years.
Yeah.
The fact that we can grow revenue 26% on flat lending revenue is a real testament to the diversity of our business.
I hate to ask them, but you can't feel great about the share reaction.
You know, any given day, it's hard to predict what's going to happen with the shares. But what I can say is the business is doing incredibly well. The strategy is working. We're really happy about the trend. We are taking a conservative view on lending, but that's prudent given how uncertain the environment is. If the environment becomes more stable, we'll be more aggressive on lending. But right now, there's no need to, and the environment remains as uncertain.
Okay, listen. Okay, if somebody is a long-term investor, they should not be disappointed at the share reaction. They should applaud the share reaction. Because if you're a long-term shareholder of SoFi, somebody that wants to hold this stock for the next 5, 10, 15 years, right? You're looking at SoFi's numbers and you're like, everything's improving with the business model. The profitability is improving, the revenues are improving, how many customers they have is improving, and all of them are actually improving quite dramatically, right? How many different people have signed up for the products, Galileo, everything across the board. Meanwhile, you get the share price to stay low, under $10, $7, right? You should applaud that. Like I woke up today seeing SoFi down 10%. I said, let me look at the numbers. I looked at the numbers and I said, let's freaking go, baby. And I bought $13,000 plus of the stock. And I'm probably going to be buying the stock again later this week. I'll probably be buying it the following week and following week. And so ultimately, I look out there at SoFi and I'm like, please stay at $7. Go to $6. I don't care. I'm not planning on trying to like buy SoFi and then get out next week and get out next month and like, oh, it went to 10, let me get out. Like, oh, it's at 9, let me get out. Like, so I'm playing the long game here, right? And so just anybody that's a true long-term investor is like, who cares? Like, it just gives me more time to accumulate more shares and build out a nicer position in the stock.
As it has for the last 6 months on rates.
Mr. Noto, good morning. It's Ed in San Francisco. A lot of the questions I got from our audience for you were about the capital you raised and your strategy going forward. There was convertible in 1Q. A lot of interest in that. I actually am not clear why, but the people want to know. So that's the question.
Yeah, I think people misunderstand the share count. First, we did two things in Q1. First, we issued a convertible note at 1.25% interest. That allowed us to redeem a preferred security that we were paying 12.5% interest on. So that is going to provide an interest savings for us. And we've already noticed all of the holders of that preferred instrument. And so that's being redeemed sooner than expected. We also bought back an existing convert that was trading well below its face value. And that was accretive to book value. And it was basically neutral on tangible book value per share. So there's some perception that it was dilutive. It's not dilutive on a tangible book value per share. And I think there's just a misunderstanding on what the total ending share count will be in the future.
Here's the deal, okay? You think Anthony Noto, with all his experience, right? You know, former very well-respected person from Goldman Sachs, right? The big dog at the big dogs. Like, do you think he's just going to do things to do things or like not make smart decisions? Whatever decision he makes is going to be a much more intelligent decision for SoFi for the long term, right? And we see that his decision making is clearly about the long term. Otherwise, once again, he would just be trying to give everybody who has a pulse a loan right now, right? And he's clearly not doing that. And so at the end of the day, like to think like, oh, Anthony Noto's not going to make the right decision for shareholders, like I know better, it just doesn't make sense. Like I fully trust that he makes every decision that is in the best interest of SoFi overall.
My colleague at Bloomberg Intelligence, Herman Chan, has a very clear thesis for you guys. You have a brilliant app, strong user interface, one-stop shop, and you're targeting young professionals. That's what they think. But the story really is this higher interest rates for longer environment narrative. How does that thesis work in that rate environment, Anthony?
Yeah, well, first of all, your colleague said it very well, and so we should consider having them being one of our spokespeople. But what I'd say is higher for longer is going to create challenges for financial institutions. We are very well capitalized. We have a 17.1% risk-based capital ratio, so we have ample cushion in our capital ratio relative to where we have to operate.
If you want to know how many shares of SoFi that Anthony Noto owns, it looks like he owns at least 7 million shares of SoFi stock, from what I'm seeing. Yeah, it should be at least 7 million shares of SoFi. It's a lot of flipping flapjacking shares. So, yeah, it's not like he's a small shareholder in the company overall. By the way, I'm looking to, on 1000xstocks.com, I'm looking to add SEC filings hopefully next. So let's say, I wanted to see all the recent SEC filings for SoFi. Ultimately, what I'm trying to do next is basically have something next to earning calls that says SEC filings and just type in SoFi and boom, all their SEC filings come up there and all the Form 4Ks and 10Ks and 10Qs are all right there. And so I could just easily access. I'm like, that's going to save me so much time. It's insane. So, but anyways, yeah, it's not like Anthony Noto owns a small amount of shares in this stock.
From a regulatory standpoint, and we have
he's very financially incentivized for SoFi to become a $25 stock, $50 stock, $100 stock down the road.
Liquidity. That said, as we saw today, another regional bank was really challenged. We're also benefiting from really strong deposit growth. We had a record growth in deposits, $3 billion of new deposits, and 90% of our deposits are from direct deposit customers, which means we're their primary account, and it's very, very sticky.
It's big.
But higher for longer will put stress on other people's balance sheets if they're not hedging appropriately the way we do. We hedge our loans once we grant them, so we don't have that interest rate exposure. We can also match what we're giving as an APY to our SoFi Money members against the loans that we're offering and the rates that they have to maintain a very high NIM, and we've been able to do that consistently. In addition to that, we also have the tech platform business, which is not tied to interest rates. And then in the financial services business, we have the Invest platform that's growing very nicely, good AUM growth, good member growth, and another source of diversified revenue for us.
We're a technology show.
And you hear what he talks about, hedging of loans and those sorts of things. Those are the type of things, if you're a very sophisticated gentleman from Goldman Sachs, those are the type of things you learn and those are the type of things you do, right? Those are also the type of things that maybe could hurt revenue growth or profit growth in the short term, right? But ultimately, they're the best long-term decisions you can make. If you don't want to hedge your loan book, well, you can set yourself up for some problems if interest rates go certain ways that you don't want them to go.
The specifics of your technology, Anthony, but I want to bring our audience that macro flavor that you so brilliantly give, because why are you more cautious on the US economy? Why are you seeing 5% excess of unemployment? Why are you seeing these interest rate cuts that you've now basically halved in your expectations for 2024?
Yeah, our balance sheet has grown quite meaningfully. It's about a $30 billion balance sheet now. So as we came into 2024, we had a choice. Could we come up with our own expectations for 2024? Could we use consensus expectation? Let's just take a planning stance that's really conservative. And the planning stance that we took then was that there would only be 4 rate cuts. The market was factoring in 6 rate cuts at the time. We also took a planning stance on unemployment that would be more than 5%. The market was well below that. And we also took a stance on GDP contraction that was modest. Well, here we sit today, 3 months later, and the market's only factoring in 1 to 2 rate cuts. So I'm really thankful we took a conservative stance going into the year, and I'm really thankful we still have a conservative stance. I couldn't feel better about the underlying trends of our strategy and execution of our business, but I don't think we're in an environment where anyone has a really strong, high conviction level on where rates will be. There's still a debate whether there'll be any rate cuts whatsoever. So we just can't put the business at risk, hoping that we can figure it out. So we're going to a conservative point of view.
I love that. Once again, Me as a long-term investor, I hear stuff like that and I freaking eat it up. I love that. I love that that man wants to play more conservative. We're in a financial institution here. We don't want to, things to go not the way they expected to go. And next thing you got a go under situation, right? And next thing you know, you're like an SVB or whatever, right? You don't want to have to count on the Fed doing certain things and that you're going to be able to predict inflation and where the Fed goes. And no. Okay. I respect that. I like that. I like guys like him. I like guys like Jamie Dimon. I like guys that are a little more conservative when you're running a financial institution. Like, is he running a tech company also? Yes. But when it comes to the financial institution side, be more conservative. Yeah, so what? It hurts your growth short term. Ultimately, it's a long-term benefit. That's what I like about SoFi. One of many things I like about them.
You're moving away from this kind of trademark student loans and refi business. Why?
Well, the strategy when I came in 2018 was to create a one-stop shop for all your financial services needs. There was no one providing all the products that you need for the big moments in your life and all the days in between. So we offer home loans, student loans, personal loans, in-school loans, checking and savings called SoFi Money, investing, insurance, small, medium business loan, lead generation, in addition to the tech platform business. So the strategy was always about building a one-stop shop for all your financial services needs. And that's actually resulted in a diversified business that allows us to make choices on what we grow versus what we take a conservative view on.
Love it. I love it. Got nothing more to add, okay? Appreciate y'all joining me as always. Thanks so much for being here. If you are looking to get the wait list, 1000X, we're at about 330 plus now at this point in time, about 330 people. We're letting in a few people a week on either monthly plans or yearly plans. You can check out 1000xstocks.com and join the wait list there. Other than that, pin comment down there today. I'll put my Instagram and my X. If you want to follow me, post a lot of stuff on X each day and post a decent amount of Instagram stories as well on different subjects. So if you want to follow me, those will be the pin comment down there today. Much love and have a great day.